Meme stocks, the power, the hype, and the fall. Some people made millions, others lost everything. And it all started with a joke. Meme stocks changed investing forever. But was it all a scam? One viral movement shook Wall Street. But most traders didn't see what was coming next. And that mistake cost them everything. The rise of meme stocks. The madness started with a simple idea. Could retail investors take down billion-dollar hedge funds? Could everyday people flip the script on the financial elite, using nothing but their smartphones and social media? It wasn't just about making money. For many, it was a rebellion. A financial uprising against the institutions that had manipulated markets for decades. Reddit's Wall Street Bets wasn't just a trading forum. It was a battlefield. Users weren't just investing, they were fighting back against Wall Street. The target? GameStop, a struggling company that hedge funds had heavily shorted. Hedge funds bet billions against it, expecting it to fail. But a small group of traders saw an opportunity. If enough retail investors bought shares, they could trigger a short squeeze, a situation where hedge funds would be forced to buy back shares at skyrocketing prices. Keith Gill, aka Roaring Kitty, was one of the first to see the potential. He wasn't just following the hype. He truly believed GameStop was undervalued. He bet $53,000 on the stock, and thanks to the frenzy that followed, his position ballooned to nearly $50 million. But he wasn't alone. Millions of everyday traders followed suit, and soon, GameStop's stock surged from under $20 to a staggering $483 per share. Hedge funds like Melvin Capital suffered catastrophic losses, with some estimates suggesting they lost billions. The excitement spread beyond GameStop. AMC, BlackBerry, Nokia, stocks that Wall Street had written off suddenly became battlegrounds for retail investors. But while some walked away with life-changing money, others watched their dreams collapse just as quickly as they had formed. Winners and losers, the gamble of a lifetime. One Reddit user started with just $1,000, riding GameStop's explosion to six figures. But here's the twist. He sold at $480 per share and walked away a millionaire. Another trader watched his account hit $600,000. But instead of selling, he held on for infinite gains. Days later, his account was nearly wiped out. The problem? Not everyone cashed out. During the GameStop stock surge, many investors saw it as a chance to escape their 9-to-5 jobs. Some even took out loans to buy in at peak prices, believing in the hold the line movement. But when the stock plummeted, many were left with massive losses and overwhelming debt. As prices soared, Wall Street fought back. Trading platforms, including Robinhood, suddenly restricted buying. Retail traders could only sell. Panic set in and prices collapsed. Many believe this was a coordinated effort to protect hedge funds, while others argue it was simply a result of volatility and risk management. Others followed the same fate. Stories emerged of traders who bet their entire savings, expecting another rally, only to see their wealth vanish in days. Some had borrowed money they couldn't afford to lose, believing meme stocks were their golden ticket. Meme stocks weren't just about GameStop. AMC became another battleground, as retail traders called themselves apes and promised to never sell. The belief was that hedge funds would eventually be forced into another short squeeze. While some saw their investments grow, many refused to take profits and ended up watching their gains disappear. Options trading made things even riskier. Some traders bought call options, expecting the price to skyrocket further. But when GameStop and AMC crashed, those options expired worthless, wiping out entire portfolios. Lessons from the meme stock craze. The meme stock saga exposed the brutal reality of high-risk investing. The few who timed their exits right walked away with fortunes, but the vast majority held on too long, chasing a dream that never materialized. Meme stocks didn't just create winners and losers, they changed the way people viewed investing. The traditional financial system had always seemed untouchable, a world controlled by hedge funds and institutional traders. But for the first time, retail investors showed they could move markets, even if only for a brief moment. Even after the dust settled, meme stocks remained a controversial topic. Some traders still believe another short squeeze is possible. They hold onto their shares, waiting for another massive surge. Others have moved on, realizing that what happened in 2021 was a once-in-a-lifetime event. Will meme stocks rise again? There are signs that the market is changing. The GameStop and AMC movements inspired a new generation of retail traders, many of whom have now shifted their focus to other speculative investments like cryptocurrency, NFTs, and artificial intelligence stocks. The same principles that fueled the meme stock craze, social media-driven hype, retail investor coordination, and the desire to beat Wall Street, are now being applied in new ways. Some experts argue that meme stocks will return, just in a different form. They point to stocks that are currently seeing unusual levels of retail interest, such as Tesla, Rivian, and Palantir. These stocks have large online communities behind them, and their price movements are often influenced by viral trends, just like GameStop was in 2021. Others believe that the original meme stock boom was a unique moment in history, fueled by the perfect combination of factors: pandemic stimulus checks, low interest rates, and a collective frustration with Wall Street. Without these conditions, another GameStop-style event may be unlikely. The future of retail investing. One thing is certain: retail investors are here to stay. They are more informed, more organized, and more willing to challenge traditional market players than ever before. Hedge funds and institutional investors have had to adapt, and some have even started monitoring social media platforms like Reddit and Twitter to anticipate the next big move. The rise of commission-free trading and the gamification of investing apps like Robinhood have made it easier than ever for anyone to enter the market. While this can be empowering, it also poses significant risks, especially for inexperienced traders who may not fully understand the consequences of leverage and options trading. As we look ahead, the real question isn't just about meme stocks, it's about the evolution of financial markets. Will retail investors continue to disrupt traditional investing? Will new regulations be put in place to prevent another short squeeze event? And most importantly, how can individual traders navigate these uncertain waters without falling victim to the same mistakes of the past? Final thoughts. Understanding the psychology behind investing is just as important as knowing the numbers. Markets move based on fear, greed, and hype. The meme stock craze proved that retail traders can influence Wall Street, but it also exposed the dangers of speculative investing. For those looking to build wealth, the key isn't chasing viral stocks. It's learning the fundamentals. Investing isn't about hitting a jackpot overnight. It's about making smart, consistent decisions that lead to long-term financial security. The biggest winners in the market are not those who take the wildest risks, but those who make informed, strategic decisions. Will you be among them? One thing is for sure: this wasn't the last time retail traders shook Wall Street. But next time, will they be better prepared? Will they learn from the past, or will history repeat itself? So what do you think? Will we ever see another meme stock revolution? Or was 2021 a once-in-a-lifetime event? Drop a comment below, and let's discuss. Would you have sold or held? Let's settle this once and for all. Don't forget to subscribe for more finance breakdowns, because knowing the truth about money is the real way to win.